Mark, to be fair, the stock may be off by 7.5% or so this morning, but if you look at a year to date, that stock is up by about 87%. So there was a lot of expectation and a lot of buildup in the shares heading into it.
Yeah, you're exactly right, Becky. I mean, when you do an investor day, you usually go out, you talk about the company's strategy, you announce either new products or services, and you show them, and then you lay out very concrete financial targets, whether it's revenue growth, margins, profitability. And clearly in this event, they only did the first thing. That being said, they did lay out a lot of enablers and gave a lot of content on the manufacturing and engineering efficiencies that they're putting in place to reduce costs, which is key to Tesla continuing to grow and deliver, more affordable products off the next generation platform that they talked about.
Right. I think another key point was that Musk introduced a lot of the other top executives at Tesla, and that's certainly because of the questions that have been asked about his ability. He's been spread so thin by all the other companies he's running, and especially how much time that Twitter seems to have taken up from him at this point. I guess this, to me, even though it may not be what a normal company might be doing at an investor day, it seemed like more normal than the usual Tesla investor day, I think. He didn't make these grand proclamations. He didn't promise things that there's no way you're going to be able to deliver.
You're exactly right, Becky. This was more a traditional kind of investor day. To your point, they trotted out a number of executives that they hadn't shown in any previous presentations to really take away at least some of the concern that they have about Musk and, the fact that he's, distracted maybe by some of the other business ventures. So they showed, or they tried to show, obviously, the strength of the bench. But they talked about meat and potato kind of things in the auto industry around, how they're driving costs down to improve their margins, what they're doing in terms of supporting the infrastructure for charging, and talking about, in very vague terms, new products that are coming down the pipe. So you're right. Compared to previous presentations, it was dialed down about a level of 5 to 10.
Okay, and what has to happen next? I mean, everybody keeps talking about all the competition that's out there, but it's hard for anybody to kind of catch up with the gains that Tesla already has, the first mover advantage and a lot of the research that they've done. I mean, what do you think this market for EV looks like a couple of years from now?
Well, I do think, to get mass adoption, you have to get the pricing down to, the $30,000 to $35,000 range. That's where the market is really going to take off. And it's very interesting. You got Tesla, which started out as a software and a battery company, and is becoming also a manufacturing company. On the other side, you have the established car makers who are basically manufacturing and engineering organizations trying to become software and battery companies. And so the key is going to come down to who wins is around appealing product and around, the software or the user interface. It's around cost leadership, and it's around consistent execution. And Tesla right now is one generation ahead of the other automakers, but automakers like Ford with their Mach-E and Lightning and Hyundai with their Ioniq vehicles are starting to make a lot of progress. So I think it's going to be very interesting, but Tesla still has the leg up on the competition. And I think they demonstrated that yesterday.
Where's your money on all of this, though, if you had to pick a winner a couple of years from now?
Well, I don't think there's going to be one winner. There's going to be a number of winners and there's going to be a number of losers, because when you look at the adoption of EVs over time, I mean, this is a huge addressable market. In the next couple of years, you're going to see a global market of about 100 million vehicles. So I think you're going to see, businesses like Tesla, which are going to continue to be either the leader or amongst the leaders. You have businesses like, General Motors. They're coming out with a lot of products in the next 18 to 24 months. They have to prove execution. Ford, I think, is doing a very nice job with their new EVs. And, Hyundai, Kia. So I think there's going to be a number of winners and not just one.
Mark, if you had to look, I mean, some of the proclamations that we have heard, though, that there has to be $10 trillion in spending, that we should get to all EV vehicles and all electric vehicles, those still seem a little crazy to me.
Well, you have to look at the time frame folks are laying out. If you look at what Tesla mentioned yesterday, they want to get to a run rate of 20 million units of production by the end of the decade. I don't see how that's feasible when you look at not only the capital expenditures involved, but you have to get the supply base up and running. You have to be able to execute in a very tight time frame But over the arc of time, I think you're going to see the entire industry, have a number of stranded assets from as ICE vehicles kind of melt away over time. But it's going to take a long time. But this transition is happening. And the question is, what's the cost, and are investors going to want to provide the capital?
President and CEO of Gerber Kawasaki, Ross Gerber, joins us now. Ross, great to have you with us.
Thanks for having me.
What you had tweeted that some of the stuff that you saw was insane in the factory. So what exactly got you most jazzed about its vision for reducing costs for the next gen vehicle by 50%? Because that's a big number.
Right. I mean, it's all about battery cells. And when I originally went to Battery Day years ago and saw the prototype factory for cell production of the 4680, it was kind of like this new little whiz-bang thing. And when I went to the factory yesterday and saw what it's become, it's incredible because they've been able to shrink the footprint for manufacturing these cells to quite a small size, and it allows them to build these factories all over the world much more efficiently. And battery production is really the key to alternative energy's success for energy as well as for EV and transportation. So the 4680 cell is probably one of the most important technological advances in modern history. And when they achieve this, which hopefully will be very soon, it's going to bring Tesla to the next level.
He also spent a lot of time talking about moving away from a lot of the raw materials that battery technology is reliant on now. Talked about a lithium iron phosphate battery, so an iron cell-based battery, which is used in China right now. So it's out there right now in commercially produced EVs. He also talked about moving away from rare earths, and you see the consequence in shares of MP Materials this morning, which is down about 13% on this notion that you can actually engineer rare earths out of the process, Ross. And I'm wondering, how quickly you said it's going to happen sometime in the future, but as a bull and as somebody who is invested in the stock, how soon do you want to see this? What are your expectations on timeline?
Well, first of all, I think that when Elon is laying out a plan, he's talking about very long term, and his vision is very broad. So a lot of the things he said and the markets are reacting to today are very premature because we're very far away from doing all those things yet. And the chemistry of building a battery is quite difficult and complicated. And so like all these are ideas that are incredibly efficient ways to improve battery production, but haven't actually been invented yet. So I think the market's maybe a little bit rushing to judgment, not to mention all the other EV players that need magnets. I own MP in my fund GK. MP is a great company, and they make these rare earths that are crucial to motor production. So we don't see anything on the short term to affect these companies. But longer term, I think for an electric future, we have to be very efficient with the use of the commodities involved.
Hey, Ross, even Goldman today says the ability to cut your cost in half is huge. But then they say, look, people were looking for a third generation vehicle, or at least some specifics. This is a company with a magical ability to form narratives. They rolled out a prototype for the Cybertruck. Why not this time?
Well, I think, one of the things I was pushing on, and pushing towards the board was really more transparency about management and the teams that are running Tesla. And that was the purpose of yesterday, was really to introduce everybody to all the different teams that work at Tesla and the way Tesla's organized. And I thought they did a great job clarifying their organizational structure, which was one of the things I really wanted to see. Although, Elon is still sort of the king of the heap there, and there isn't really a number two. But what we saw was a really great group of engineers building incredible technologies that'll advance, Tesla into the future. But when you're talking about vehicle launches, those are like parties, like when Cybertruck launched or Model 3. I've been to these launches and they're super fun and they're parties. This was for investors, and everybody there was institutional investors. There were no goofballs there. It was like a really serious room of investors. And so I think they want people to understand where Tesla is going long term, and I think they did a very good job articulating that. But I think people had they want a show, like that's what I do well, put it on the show and make it fun, and that's going to happen soon when they launch this vehicle. But I think they're still finalizing the design.